What's needed to get an SBA loan and the steps to getting one? What does the SBA do? The Small Business Administration does not actually loan money. Instead, they set loan guidelines. Because the SBA guarantees these loans, the rates are more favorable, terms are more flexible. But the SBA says real estate investing, for example, is too high a risk for them. Not every company can qualify for an SBA loan. For those that are able to, the SBA can come to the rescue and get you funding. But be aware, there's a lot of paperwork. The Small Business Administration has various CapLines loan programs and SBA Express. The SBA's lending partners actually make the loans. The SBA also offers research grants if your company engages in scientific research and development. The SBA uses the FICO SBSS, Small Business Scoring Service. Scores reflect likelihood of an applicant paying their bills timely. Scores range from 0 to 300. Higher scores mean lower risk. The higher score you have, the better. Personal and business credit history plus financial data go into the total score calculation. For SBA loans, you will not be approved with a score under 140. However, they typically set a cutoff as high as 160. Below that, you will probably be denied because of being too high a risk. Chances are good an SBA lender won't even submit your application to SBA if your score doesn't meet the threshold. For SBA loans, you usually need to show some time in business. The most popular SBA loan for working capital is the 7A. Approvals go up to $750,000. Rates are usually 2 to 4% above prime rate. All owners with more than 20% ownership in the business must provide a personal guarantee. Good consumer credit is required. For 7A loans, you must demonstrate a need for funds and have a sound business purpose in mind. Your business must meet SBA's size standards and be considered small within your particular industry. You have to operate for profit and must have reasonable equity to invest. A company must do or propose to do business in the United States or its possessions. Plus, the company must have tried to use other financial resources. These include personal assets, also known as bootstrapping, before applying. The 7A program allows for loan amounts of up to $5 million to fund startup costs, buy equipment, etc. A company can also buy new land. This includes construction costs, repair existing capital, buy or expand an existing business, refinance existing debt, or buy machinery, fixtures, furniture, supplies, or materials. 7A fund benefits include flexibility, longer terms, and potentially lower down payments versus other financing options. Plus, there are specialized programs for entrepreneurs interested in exporting, located in underserved communities, who are members of the military community, and those looking to meet short-term and cyclical working capital needs. Most such loans are repaid with monthly payments of principal and interest. For fixed-rate loans, the payments stay the same, since the interest rate is constant. For variable loans, a lender can require a different-sized payment amount when the interest rate changes. SBA CapLines is another popular SBA loan option. According to the SBA, CapLines is the umbrella program under which SBA helps business owners meet short-term and cyclical working capital needs. Loan amounts go up to $5 million. Loan qualification requirements are the same as with other SBA programs. Loan or revolving terms are available. SBA CapLines divide into 5 different types. First is the seasonal line, which provides advances against anticipated inventory and accounts receivables meant to help seasonal businesses. Then there's the contract line, which finances direct labor and material costs associated with performing assignable contracts. The builder's line is meant for general contractors or builders constructing or renovating commercial or residential buildings. A company can finance direct labor and material costs, where the building project serves as the collateral. The standard asset-based line is for businesses unable to meet credit standards associated with long-term credit. Financing is for cyclical growth, recurring, and/or short-term needs. Repayment comes from converting short-term assets into cash. And finally, the small asset-based line is designed for asset-based revolving line of credit up to $200,000. It operates like a standard asset-based line, except some of the stricter servicing requirements are waived if the business can consistently show repayment ability from cash flow for the full amount. SBA Express is a faster means of securing an SBA loan. Loans go up to $250,000. Rates usually range from 2 to 4% above prime rate. Also available is Community Express for low and moderate income entrepreneurs. SBA Express offers access to a credit line for well-qualified borrowers. Approvals go up to $350,000. Interest rates vary. SBA lets banks charge as much as 6.5% over their base rate. Loans over $25,000 require collateral. For approval, you need your company's balance sheet and income statement, account receivables, collateral, articles of incorporation, business licenses, contracts with third parties, and your company's lease. SBA 504 is the SBA's second most popular loan type. It is often used to buy land, equipment, or real estate. The bank funds the loan. SBA generally guarantees up to 40%. You can usually get a loan up to $1 million. Typically, you contribute 10% of the equity. SBA 504 requirements include that you must operate your business for profit with a feasible business plan and relevant management experience. A company must do business in the United States or its territories. The company must have tried to use other financing. This includes personal assets, also called bootstrapping, before applying for a loan. Your business must have a tangible net worth of under $15 million. Your business must have an average net income of less than $5 million after taxes for the last 2 years. A business must be able to repay the loan on time from its projected operating cash flow. Maximum loan amounts are determined by usage. For land and buildings, the loan term is 20 years. It's a 10-year term for machinery and equipment. 7M is the SBA's microloan program. You can get loans up to $35,000 for working capital and growth. Average loan amounts are about $10,000. These funds come straight from the SBA. This is unlike the 7A, where the funds come from a bank. SBA's microloan program provides short-term loans up to $50,000 to help small businesses start up and expand. The average microloan is about $13,000. The SBA makes funds available through specially designated intermediary lenders. These are nonprofit community-based organizations with experience in lending, management, and technical assistance. These intermediaries make loans to eligible borrowers. Microloans have to be repaid in 6 years and can be used for working capital, buying inventory or supplies, purchasing furniture or fixtures, or for buying machinery or equipment. Contact us today to learn more about what's needed to get an SBA loan and the steps to getting one.